Hello, 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 hello. Welcome everybody to Midweek Market Review and Analysis. This being Thursday, the 9th of June. Just gonna get my mug up on the screen in a little bit. Yeah, it's been a very, very good day. There we go. It's been a very good day here for us at Pluro. Let's get this music down and we will go. Right, where is that? Okay, there we go. All right, so what a day, what a day, what a day. Charts at the ready. Multiple screens. Getting through the technology, but we'll get there. How you doing? Just check in the chat, check in the comment, the chat section. Say hello. Let me know who's here. How's your day, your week gone in the market so far? And we will get to it. All right. So, just need to do a couple more things here. I'm actually, apologies by the way. I missed 7 p.m. I was actually coding an algo that I may share with you guys as an apology for being late. We'll see. It's actually going quite well. Trying to see how we can automate the Sensei model that we're going to teach you not many days hence. And if you haven't figured out by now, around here, the name Sensei refers to me. I wonder why, but if you hear some of you tell it, I've earned it. I hope you will all agree. All right. One more thing. I'm actually, before I put my chart on the screen, I need to. Okay. All right. Cool. Excellent. So, I was just checking out something, or downloading some data from TradingView that I needed to run that test. Right, let's go. Share screen. Stop share. Share screen. Which one am I looking for? That one. And there we go. There we go. All right. Coolio and Cheerio. All right, so this is a summary of today. Now, yesterday I actually went through from building from the ground up, right? Taking you through this model. Hi, Dr. Goki, how you doing? Good to see you. So I went through building from the ground up how this model works. Well, not how the entire model works, but parts of the model that you need to understand to basically get to work with it. Now, today I'm going to show you a live trade example. And 2 trades taken today, Actually, 3 trades taken today, 2 on one account, 1 on the other. I didn't show you the account I took the first one on. 2 wins, 1 loss. The loss was for less than 0.5%. It was basically okay, this is not going to work. The mean regression is not in, get out and go into the move. But if you remember yesterday, I called the fact here live that I expected today to be a bullish move in gold. I told you how to get in, how to use True Day, how to basically gave you the ingredients and say go cook your own meal with the recipe. And then live in London, with those of you who are on the Telegram chat, basically cooked the meal live on camera and said this is what it looks like. So as I called yesterday, we did have a bullish day. Now, being correct about the bullish day is not special, because a dead clock's right twice a day. If you just guess what direction price is going to go a certain day, you will be right half the time. Well, if you guess the same direction every day, you'll be right half the time. So knowing what direction it's going in is less than half the battle. The other half is knowing how to take advantage of it. And I showed you that yesterday. So I am going to basically take everything you currently see on my screen, off the screen, and put it back on as we go along, right? So we'll take all this off, except for the vertical lines, because those signify days, according to US New York midnight. So that's what we call true day here in the SMC world, because that's basically when the global financial markets reset every day. So we start from the weekly level. We draw our open highs, lows, and closes. We have an indicator for you in the academy that does all that for you. I'm just going to put it on, and you will see open highs, lows, and closes suddenly draw themselves. We call them bust ups. My phrase, my word. I'm not going to claim it as my concept because it's not my concept, but how we apply it is, in the sense that from a higher time frame, wherever price opened, closed, or its furthermost high or low was set by the auction theory battle between deep-pocketed bulls and bears. So if price reached this level and then receded to this level, and then reached that level and then receded to that level, those four levels are critical because they only formed because people with deep pockets either wanted them to form, or when those with deep pockets had a battle, the ones who won overall drew the line somewhere in between. So you will see that when you apply these bust ups to anything under 4 hours, an hour, all the way down to 5 minutes, they look prophetic. For instance, yesterday, the low of the day was a bust up. The high of the day was clustered around the bust up. Today, not necessarily the high and the low, but you see price making significant turns around there. Now, if I were to add the daily charts, let me just add the daily charts to that, because I'm sticking with the weekly here. If I added the daily charts to that, let's see, bust ups. Okay. There we go. So enable time frame 1. And I'm going to put 1 day. Okay. So that's going to populate the chart with the daily highs, opens, lows, and closes. You will see that the confluence is even more. That's just taking a while to set up. So we'll let that do its thing in the background. So I'm going from weekly to 4 hour to 15 minutes or 1 hour. Okay, so we put the dailies in, and you can see that it's even more significant, or look, the confluence. You can go up to monthly. Just drop 2 time frames in MetaTrader 4 or 5. I think 4. 5 is a bit funny. So you can go weekly, 4 hour, 50 minutes, or 1 hour if you want, or 30 minutes. You can go monthly, daily, 1 hour, or 4 hours if you want. And you can go daily, 1 hour and 5 minutes, or 15 minutes if you want. Now I'm going weekly, 4 hour, 15 minutes. All right? And sometimes I'll use the 1 hour to check that I'm in the right direction. So the first thing I'm going to do is I'm going to draw true day. This is 5 a.m. in New York, or 5 a.m. my time. That's midnight New York. Very important. So basically, this is the beginning of the day. Of course, we're in gold on IC Markets. That's my broker. So what happened? Well, we go to weekly. So we're going to go to 4 hour chart now, because the weekly levels are mapped on our chart for us automatically via that indicator. Now I'm going to take, okay, so this is the 4 hour chart. And we looked at this yesterday. What had happened was, there's a 4 hour low here. Now, this same thing happened last week. Last week told us, okay, let's go back to last week. Last week told us that we are in a bullish protocol, right? What happened last week? Let's just crunch this in. Last week, there was, okay, well, I'm not going to go back historically, but there was a historical low that was, order block that was tapped into. But for the sake of just this trade, a low from the previous week on a 4-hour chart, and I believe that was a weekly low, was taken out. So that was Wednesday, 24th of July. And that was the low of that week. And so that low was cleaned out, right? Now, that low being cleaned out is this dotted line you see here is that week's low. It was rated, and then price reversed to the upside. How did it reverse to the upside? An engulfing pattern or a reversal pattern of some sort. Engulfing, hammer, pin, doji, whatever. It reversed, right? Okay. Once that happens, we can drop down to a 15-minute chart and get a signal. However, it didn't just reverse. We also took out the structure to the upside. Now, what structure am I looking at? I am always looking, this is my rule, at the last swing high before the reversal. Reverse that for a bearish setup. So this was the swing high on the 4-hour chart that sent us down to raid this level. Put that there, right? That's the swing high that I want to see cleared out for me to change my not long-term, but my mid-term bias. So once this happened here, I'm going to put this there for you to see what I'm talking about. This happened there. From that point, I am bullish on gold. At least on an intra-week basis, I am bullish on gold. Now, you could have taken this trade here, but for me, this was just a signal to say we are now bullish on gold. All right, cool. Now, fast forward 1 week later. So this happened on the 1st of July. Now we are in the 8th of July, exactly 1 week later. One quick second, just realized somebody's probably trying to get a hold of me. One second. Okay, so now this is classic in that when price is about to make a run, it will usually create inducing lows in an uptrend along the way that it can come back and raid for liquidity without taking out the controlling low. This is the controlling low here. This is another low. That's another low. That's another low. Actually, this isn't a low here. So that's not low. Ignore that. So this is one low. This is another low. And both of them have now been raided while we're still in sync with the ultimate direction. All right? Very important. Okay, so that being said, we now come back this week. We've now established a bullish bias. So I'm going to take this away. Take this away. Now, this low here is, as you can see, very near a bust stop. The bust stops are there to let you know you're in the rough area of institutional behavior, right? So, one second, let me just, okay, so, all right. So the bust stops are there to let you know you are roughly in the area where an institution did some business. We come out and we take out this low here again, right? So this is our signal. And there's a sharp reversal. This is a 4-hour reversal. That happened yesterday while we were live at 7 p.m. London time or roughly around tonight. I don't think it was a bit past about 7:30. This happened live, and when it did, I said, if I actually took a little scalp in there, and then I said that I was going to be looking for longs tomorrow. So this here was the signal, right? That was the signal. The reversal here. 4-hour low rated. We've already established a 4-hour directional bias. Price rejects sharply off one bus stop, historic bus stop, this one, and the rejection takes us all the way pretty much to another bus stop. Okay, so we're now hunting longs, right? And we then drop to a 50-minute or 1 hour, but I'm using 15 minutes for this. You can use them both ways. 1 hour, like I said, if you're in the right direction, the first 1 hour engulfing of the day, in the right direction, above or below the open of the day, based on the right direction, is usually the signal. So the 1 hour is like the simplest way to do it. It's the foolproof, well, not foolproof, but the way that really dumbs it down. But if you want to get tighter entries with a bit more nuance, 15 minutes. So let's jump to the 15-minute chart. So the first thing you do, anytime you're trading an hour or less, if you're trading on a 1 hour chart or lower, you need to know where true day is. What's true day? Midnight in New York. Draw the line yourself. If you have to, code an indicator that draws it for you. Just make sure you know where you are relative to that. One quick second, my coding session. 1 second here. I just need to feed some files to my coder. 1 second. There we go. It can keep working in the background. Come on now. All right, so, okay, good. Excellent. So, this was the day. The day opened here. As usual, we're going to draw the line. This was the open. This candle here was the open. I'm just going to draw that line out. Now, 7 to 8 times out of 10, put that in blue. 7 to 8 times, I guess put it in purple. 7 to 8 times out of 10, price would dip below this line significantly back into some sort of fair value gap, order block, something of that level. Well, there's an order block right there. It just so happens to be almost identical in level to the date, but that's an order block right there. If you understand how to draw them, that's an order block right there. So, just so happened that price was sitting pretty much in it when it opened. Now, another day, I was looking at this fair value gap right there because that looked prime to me. So that's why I thought it was going to happen. I thought we were going to go all the way down in here. Or, alternatively, my other option was this order block cluster right there. So, on a different day, price could have gone all the way down into, well, could have gone down into here or all the way down into there. We matter not, or it matters not, and then starts to push up. It just so happened to push up from here. So there were 2 trades in the day, right? 2, or shall I say 2 entries. Now, I tried to do a fade on a bearish retracement. I thought for sure, and you're allowed to be wrong as long as you size correctly. 1 second. I thought for sure that price is going to get back to this fair value gap here. I mean, when we started coming down, I took a trade down. I was up about almost a whole percent. Took my eyes off the trade, came back and did a reverse, and so I lost about 40% of 1%, so 0.4%. which is fine. I thought we were going to basically bounce off here. But again, if you understand how order blocks work, that's not my focus today. There's one sat nicely there, which is what it reacted off. Someone's making a racket in my house. All right, anyway, so it reacted off there and then pushed up for the second trade, which I caught. So how would you have entered this? How did I enter these? Well, first of all, true day, this is about 6 a.m. And I told you, if you're going to trade London, you need to be at your desk by 5, because that's when the magic happens, right? So yesterday was where we had the 4-hour signal. How do you then build? One quick second, I've just got to get rid of that noise. Just give me a second, everybody. All right, I am back. My son was making a din in the room next door. So this is the 4-hour level that we tapped into that gave us the reversal and the signal. Let's go to the 4-hour chart. I want to mark the exact point the reversal happened. All right? Let's make this straight. Okay, so let's mark the exact point. This is the reversal, that candle there, right? That hammer, that bullish hammer is the signal, the reversal of that level. So that candle closed at 4072.5, right? Let's call that 4072.25. 472.25. And this other candles open at 7 o'clock. Okay, so that means the old one closed at 7 o'clock. So let's go on a 15-minute chart. 7 o'clock is there, and 472, there we go. Excellent. So I'm going to draw a line here. 7 o'clock. This is the point at which that candle closed. I need you to understand that. That line there, that purple line there, is when this hammer, you can see that the purple line is sat directly in the hammer, is when, so it's when this hammer closed. So it's when this one began, right? So this candle started at 1902. It means this one started at 1502, but it would have closed at 1902. Very important. Okay, so that's the signal in essence. The 4-hour chart told us there's a trade to be had. Now, how do we have said trade? Well, on a 50-minute chart, you see the level. This is the 4-hour level that was swept. That's the bus stop it was swept at. Beautiful. And you should also see a mini signal happen. I mean, the same thing should happen here. There should be a 15-minute low that was swept into that level, and then a reversal. So we're going to draw the change of structure point, right? The shift of structure point, sorry. The point at which, on a 15-minute chart, that move changed structure or shifted structure. There it is. That line, how do I draw the line? It's the last, well, I mean, technically it's here, actually. I take that back. It's here technically, because that's the last swing 15-minute high, right? That swing high there is the last 15-minute swing high that drove price down into that level. Very important. The last 15-minute swing high that drove price down to sweep that level. Draw that line out. The moment price breaks the line, it doesn't need to close beneath it. This is the, basically it has to happen obviously after this. This is the point in which the 4-hour chart closed. So if we were looking at this live, we would have seen this. The moment the 4-hour candle closed and the signal was live, if we looked at our chart, that's what we would have seen. Right? And then 2 candles later, what does price do? It stabs across that line. At that point, this is the candle that stabs across the line. At this point, the trade is, or the entry is ripe. This is now telling you this trade has now been confirmed as viable. We now need to get an entry. How do we get an entry? Like I told you yesterday, all this is in the video from yesterday. You can go check it out. Draw a fib from high to low. Not the wicks, not the bodies, the actual wicks, right? That's the low that swept the 4-hour level. That is the high of the leg that broke from that low there to the swing high that broke this particular change or shift of structure level. Now, we need to wait for at least a 50% retracement. At least, right? Rule number 1, at least a 50% retracement. Better if it's lower. Rule number 2, there must have been an obvious inducement, right? This low here was an inducement. What do I mean by inducement? Well, several ways to define it. I'll just simplify it for you. This low here would have, and this engulfing that came off it would have convinced people potentially that we were now moving up, but it was above 50%, so we didn't trust it. Now, there had also been this induced low here, so if this was at 50, we would have taken it. But even if this had happened to be at 50, we also need to have seen another low before that that was induced. So 2 rules. 1, our entry must be at 50% fib retracement or lower. Secondly, there must have already been an inducement. In essence, people have paid the penalty with their liquidity. So you're less likely to be liquidity. Okay. And then when we get there, what are we looking for? Another reversal. In this case, it's an engulfing candle. Now, this is where it gets interesting. There's different ways to do this that all work. This is the way I am coding my algorithm that I'm currently building to do it. So I'm giving this to you because this was the way that the computer, the AI device could understand when I tried to explain it. The other ways were a little bit subjective. When I gave it this option, it said, yep, this is the option we're going to go with because this is the option that's very mechanical. It's yes or no. If a computer can understand it, a human being should be able to understand it even better. Okay, so that's the inducement level. Criteria number 1. We've come to at least a 50% level. Criteria number 2. There has been a reversal at that level. Criteria number 3, right? And I want that reversal to create a fair value gap. That is how the computer said, ding, there's a fair value gap there. It can be a pip or a point. Any size of fair value gap, ding. There you go. Between that candle and this candle is a fair value gap that's about, that's 64, that's 65. So you see, there is a clear 1 tick or 1 point, actually 10 pips difference in there, right? Cool. The entry is price comes back down and touches the top of the fair value gap, not the bottom, just the top of it. Now, you could just say there's an engulfing. This candle here engulfs the one before it. That's another way I try to teach the algo to code it, but it seemed to be struggling with consistency. but a human being would see that very well. Whichever way it is, you're either entering here, down here, or up here. Either way is fine. If you do that, if you've done that, which I did, thank you very much, entry there, you've got two choices of stop loss. This level, either this or this, level 1, or all the way down here, level 2. If you're scalping or intraday trading, that's your stop loss. If you're intra-week or higher, meaning you're basically trading a higher time frame, you just wanted a tighter entry on the 50-minute chart, you put your stop loss all the way down there. You can guess where my stop loss went. It went there. Where are we targeting? Target 1, the top of the fib, 2.221. Target 2, closing this fair value gap here. When I call this a rotation point, I'll teach you this later on. A point of rotation, price comes down, makes a bullish move, then fails and falls out of bed. As you can see, there's several fair value gaps in between. The top one, this is the top fair value gap there. From this candle's tip there to this candle's tip there, that's a fair value gap there. Right, so, and that is 50% of that fair value gap. But if you want to close it all the way, there we go. So that was my target 1, which I told you hypothetically I was looking for yesterday. It filled almost to the pip, and then I try to be smart and catch the fade. And I literally caught the fade, as in I was up almost 1%. So I traded this engulfing there, put it to a short. And again, this is all documented in Telegram. You all saw this. And I'm not just showing you my successes, I'm showing you my errors. So put my stop loss there. And I was trying to fill in this fair value gap here. So I was sure, and this is why you don't trade sure in the markets, you trade probable. But I was sure the price was at least going to get into this fair value gap. It didn't. Reacted sharply. Why? Because there is an order block there. It can choose what it wants to do. And so what have I done? It reacted off that order block and then moved to the upside. Now, I said, okay, if you're going to take 0.4% from me on analysis I've already gotten right, I am going to get back in the game. And that's exactly what I did. So this here now is an example of what I'm talking about. There is an inducing low here. No, I'm just drawing this out. No, this is there exactly. That's an inducing low. So this low here works in that it's cleaned out this one. Number 1. Number 2, if you take this as the 50-minute low that was taken in London, forced to form this reaction, then a market structure shift / changing character would be this level there. And I actually took this one live. I didn't just tell you I took it. This second trade, you saw me take that 0.4% loss, come back within 15 minutes and take this entry and make bank. So this stab here, again, tells us that we're bullish. What did price do? You draw your fib from there to there. Let's blow this up. All right. From there to there. So after this broke it here, so this is the top of the level we're looking at now. Did price come back down to 50%? You bet it did. and then it reacted again. And so when it came down to 50%, what did yours truly do? I got out my entry tool. It basically tapped into this order block right there, nabbed it sweetly there. Stop loss there. Now comes the hard part for many of you. Where are we going? This is where we're going, right? So we've already taken out this level here. This swing stopped there. It closed that fair value gap. Where next do we go? We got this high, and this high. Now, remember, yesterday, I was saying to you, we're bullish now. At least for the next few days, I suspect we're going to be bullish. Well, if today's going to be a bullish day of a reversal from yesterday, do you think it may make sense that it would want to take out yesterday's high? I do. That's yesterday's high right there. And it's already drawn on your screen as a bust up based on the fact that we added the daily in. So, first target there, back to this bust up, second target there. Second target, okay. There we go. It's 3.221. Now, I got 4% and I came out earlier. How did I do that? That's beyond the scope of this video. I don't want to overcook it. But, one second. Let me... Where are we? Okay. I know what to do. We're just going to go into Telegram and I will show you. One second. Oh Lord. What a day. Okay, so let's change this share here. Stop sharing screen. Start sharing screen over here. Okay, so we're just gonna do, actually, let's just do the window, and the window's Telegram, isn't it? Okay. So. All right, so if I click here, okay, so that doesn't change. That's fine. Let's just do the whole screen. Okay. Excellent. So let's go up. So you see this in real time. All right, so first of all, the premise behind my thinking we were going to close that fair value gap. So before I entered the trade, I actually, oh, you can't see that. Before I entered the trade, I actually posted this in the group and I said, hey, I think we're going to come down in here. That's because of this fair value gap there. And so that was my trade idea, which I then, that was a 50-minute view. And so I entered the trade. I got in the trade and I put it on the group. And I was up. At this point, 0.5%, almost 0.5%. And then, okay, that's that one already. But there we go. So I was chilling. I was just having the time of my life. Got on the phone, came off the phone, and boom, the price had reversed. And so I then said live, okay, fine. Came off the phone, missed it. Okay, no doubt. First of all, I was like, close the position, let it sort itself out. came off the phone, and then I missed the original entry for the long. But the fact that I missed the entry for the long didn't mean I was going to sit on my backside. Eventually found a nice entry, took it, right? Now, the reason there's no stop loss in here is because I was staring at the trade. I will not take a trade. Is there any way to tell beforehand if it was going to enter the fair value gap? There's no way to tell beforehand if anything is going to happen in the markets, Dr. Goke. You can make an informed guess. And there's ways, I mean, I could have used volume profile. I'm not doing that here because for some of you, you're still not ready for that. But you can't tell if anything is going to happen in the market. You can only make a very informed guess, right? And then trade went on further. Now you can see that my stop loss, I told you it's beyond the scope of today how I got a tighter stop loss, but I did get a stop loss. And you can see that my exit lined up with a previous level, 4-hour level, but pretty much my projection was we were going to take out the daily high, which we did. And so at the point I closed my trade, which is where I closed my trade, I was up about 4-1. Proof that trade, this was the 0.4% fade that I lost on, and then you move aside and you wait for another day. And that's it, really. So that's an example of, one second, let's pull this back on screen. Previous day's analysis, getting you ready to take advantage of something. So you're a sniper. You're not just hoping price does something. You've pre-analyzed and you told yourself, if it comes to me. So I said this was the original entry, which I missed because of the 15-minute because of the phone call I was on, but it actually helped me get an even tighter entry because I took it on the engulfing of this candle. And the entry was all the way there. That candle's low. I'm going to take away this fib now so you can see clearly. All right, there we go. Aha. And so, done live with you, right? Done live with you in, I said London, sorry, New York, sorry. Done live with you in New York. 4-1, rinse, repeat, we go again. I think this is my exit. My exit was roughly there. Yeah. Rinse, repeat, we go again. So study this video, pair it with yesterday's video, and ask yourself if you would have been able to reverse engineer this trade. And if you can't yet, that's fine. Just make sure you're starting to speak the language. So what do I see for tomorrow? Well, let's go back to the 4-hour chart. Let's take out everything. All right. Okay, so like I said, until we see the reverse signal on the fall, so this is a 4-hour high here, right? It's just been taken. Now, if this 4-hour candle closes in an engulfing, then we could see a significant retracement. And I would say that we are ripe for that, because if you go from high to low here, right? I think we're due to put in, it wouldn't be unseen for us to put in a retracement of at least 38%, we would prefer 50. So this is very feasible tomorrow. I'm not going to say likely, but it's very feasible tomorrow. Let's try this again. This is very feasible tomorrow. All right. Very feasible tomorrow. Alternatively, it could just be a little baby stop. Say 38%, 27% and up. One way or the other, how are we going to take advantage of it? The first thing we're going to do is, again, like I said, if this 4-hour candle closes in a bullish engulfing, especially if it takes out this low. Now, I take that back. If it takes out this low, that could just be a raid. It could literally just take out that low, right? And then go. So in between now and when the Asian kill zone gets going, we will have an idea whether or not we're putting in any kind of significant retracement. But assuming that it's going to be a bullish day, I'm going to drop to a 15-minute chart. You're going to draw a true day. So tomorrow, 5 a.m. there. Right? There. So this line here is going to be what happens at 5 a.m. tomorrow, which is New York midnight. That's the start of our true trading day. So how do we get here? Let's assume that we get there. 1 second. Let's assume we get there here at this level. Let's assume price comes all the way down to this level there just before midnight. Well, if we're going low, if we're going bullish, sorry, if the day is going to be a bullish day, we're first going to find support somewhere. Where? Look for liquidity profile in this range, maybe even taking out this level and coming back here, we don't know. But we would then expect price to open up, find support somewhere, push up, find resistance somewhere, and then close somewhere in between. So this is an idea of what our trade path could be tomorrow. Open, low, high, close. And your job will then be to find an entry signal somewhere in this leg here. Like I said, if you want to do it for dummies, well, not for dummies, but if you want to do it simply, right? Just draw the open, right? Draw the open of the day. If you're expecting a bullish day, wait for price to go down to pick some liquidity here. Form a 1-hour candle reversal in this area and either trade that reversal or wait till price goes above the open of the day again and then stick your stop loss so you can wait till price goes below, find support, has a 1-hour engulfing, pushes back up, clears here, take your entry 1 pip above that clear, put your stop loss at what you now believe to be the low of the day, and then find the previous day's high. Right? So in this case, that will be here. This is today's high. So we'd expect price to at least take it out. If you are more refined, more experienced, and you're following what we're teaching in the group, even with the free stuff, you can pretty much figure out on a 15-minute, 5-minute chart, how to figure out where to get in somewhere down here with the same target objective, and therefore your risk to reward is more than doubled. All right, guys, I'm going to stop it here. Go and take a real good look at this video. Pair it with yesterday's video. Ask any questions in the Telegram. If you don't have access to the Telegram, it's free. That's how to find it. It's on your screen. You don't need to pay a dime for it. All right? Now, if you want to pay something, and one second. All right. If you want to pay something, and in so doing, receive some very good value, right? If you want to pay something and in so doing receive some very good value, this is what to do. If you go to our website, I'm going to put that back up there. Where are we? Where is that tab? Okay, no, I'm just going to move to this tab right here. Okay, actually, no, what we need is not a tab. What we need is a screen. So we're going to share screen, the entire screen. All right, I'll put that up there. Okay, move this out of there. And now what you're going to do is you're going to go to this website, pluralmarkets-thehedgefund.com, right? Pluralmarkets-thehedgefund.com. It's going to take you here. You're going to read up about what we're offering, what we're doing, take a look at everything, and come and enroll for one of these price tiers. If you want to do this over 12 months, not 12 weeks, we've just opened up a special cohort for those who want to go over 12 months, both for the pace and for financial commitment. Still the same price, but you spread it over 12 months, and you also spread the study over 12 months. So for instance, this will be 1097 divided by 12, that's about 91 pounds. The same for each of these. If you want to do that, let's know. Again, come to the Telegram channel, introduce yourself, just mention that you would like to go over the 12-month version of the program. We'll send you a customized payment link, and you'll have access to a world-class trading education. This is just me logging in with a student ID. You got your live session libraries. You got your textbook chapters. The next live session is on Saturday at 9 o'clock. That's just a BST, actually, not GMT. That's 9 o'clock UK time. And as you walk through the course and you get your certificates, they'll show up here. Of course, you can come in here and you'll see whatever enrollment you have as well. All right, guys, it's been live. I've got to go. Have an amazing time in the market. See you at 5 a.m. tomorrow morning as we look to break the markets again. Take care. Love you all. Excited to see you doing big things. Bye-bye.